The luxury penthouse that's been empty for years. The tiny art gallery selling $50 million worth of squiggles. You're not looking at business. You're looking at laundry. No ski masks, no guns, just paperwork, loopholes, and lawyers. This is how dirty money gets squeaky clean and stays hidden in plain sight. Crypto laundering, aka the digital smoke machine. First up, the shiny new playground, cryptocurrency. Imagine you've got $5 million in drug cash sitting in your basement. You can't exactly walk into the bank and say, "Hey, I'd like to make a deposit." You'll be wearing an orange jumpsuit before lunch. But you can buy Bitcoin. Once in crypto land, you use something called a mixer. Basically a giant digital blender that throws your coins into a massive pool with thousands of other people's coins. By the time they come out, it's like trying to identify one egg after making scrambled eggs. But wait, it gets better. After the mixer, you don't just stop there. You bounce your scrambled crypto across decentralized exchanges. These are like peer-to-peer swap meets where nobody asks for ID. Then you might swap into privacy coins like Monero, which is basically the financial version of an invisibility cloak. By the time you're done, your dirty cash is basically playing hide and seek with law enforcement and winning. Tactic number 2, art and collectibles, aka the Picasso shuffle. Next up, high-end art, a favorite of criminals, oligarchs, and rich people with questionable taste. Why? Because unlike sneakers or iPhones, art doesn't come with a price tag from Walmart. The price is whatever two people with too much money say it is. You buy a painting for $50,000. Maybe it's a stick figure riding a flamingo, whatever. And then a year later, you sell it to your cousin's shell company in the Cayman Islands for $5 million. Boom, clean money. The best part? No one questions the price because, let's be real, art is basically legalized gaslighting. Is that a masterpiece or a kindergarten accident? Depends who's holding the checkbook. Even better, art can be stored in free ports, private, secure warehouses where no one sees what's inside. It's like a giant safety deposit box for rich people's secrets. Tactic number 3, gambling laundering, aka Vegas vacation with benefits. Casinos, where dreams go to die and money goes to disappear. You walk into a casino with a duffel bag full of drug cash. The kind of bag that screams, "Please arrest me." But you don't panic. You stroll right up to the counter and buy chips. You play a few harmless games, maybe lose a little, maybe win a little. You don't really care because you're not there to gamble. You're there to wash. Then you cash out your chips and say, "Look, I just had a lucky night at the tables." Now your $1 million is officially gambling winnings. And here's the beauty of it. The government loves taxable gambling winnings. Nobody cares how lucky you are. They just want their cut. As long as you file the paperwork and pay your taxes, nobody asks where the original cash came from. To them, you're just another lucky high roller with impeccable timing. Tactic number 4, fake charities, aka the holy grail of irony. Next level, charity laundering. Set up a fake nonprofit called Save the Invisible Pandas. Make a nice website, print some glossy brochures, maybe even sponsor a sad-looking commercial with a panda that may or may not exist. Then, you donate your own dirty money to the charity. Looks completely legit. The charity then pays you back through perfectly legal salaries, consulting fees, or reimbursed expenses. Suddenly, your dirty money is legitimate income. And while you pretend to be a saint saving invisible wildlife, the IRS sees a selfless hero doing God's work. The criminals? They see a beautiful, tax-deductible, government-approved money washing machine. No questions asked. Tactic number 5, insurance laundering, aka the policy flip trick. Ever heard of using insurance to clean money? It's one of the sneakier tricks in the book. Here's how it works. You buy a life insurance policy or an investment-linked insurance plan, the kind that allows you to dump in massive premiums right up front. You pour huge sums of dirty money into those premiums. It's technically just an investment contribution. Then you wait. There's always a waiting period to avoid raising red flags. That's called the cooling off period. Once that time passes, you either cancel the policy or cash it out. And just like that, you receive clean legal money with a tidy little paper trail that shows it all came from a perfectly legitimate insurance payout. Why yes, officer, these millions came from a perfectly legal investment product. Technically, not wrong. Tactic number 6, Smurfing, aka Army of Smurfs. Alright, time for a classic, Smurfing. Let's say you've got $1 million in physical cash, stacks of bills that would make a bank manager sweat. You know you can't just walk in and deposit it all at once without setting off alarm bells. So you break it up into tiny deposits, each one under $10,000, just below the reporting threshold that triggers automatic scrutiny. You spread these deposits across multiple banks, different branches, different days, and even different people. Those people, Smurfs. Not blue, not tiny, but very useful. Each deposit looks harmless on its own. No single red flag. The system's built to catch elephants, not swarms of ants. And before anyone notices, your mountain of dirty cash has quietly slipped into the banking system, looking perfectly ordinary. Tactic number 7, layering, aka the financial maze. Now, the fun begins, layering. At this stage, you've already slipped your dirty money into the system, but leaving it there would be too easy to trace. So now you start moving it around, constantly, everywhere. You wire the money through a web of accounts, local banks, foreign banks, offshore trusts, different currencies, fake invoices for fake businesses, payments to shell companies that don't actually do anything. Every move adds another layer of distance between the money and its criminal origin. The goal is simple: turn your financial trail into spaghetti, a tangled, messy plate of transactions that no investigator wants to sort through. The more complex, the harder it gets for anyone to follow. And by the time someone even starts to figure it out, you're already on a beach somewhere, drinking something ridiculous out of a coconut. Tactic number 8, cash-intensive businesses, aka the Laundromat cafe. Ah yes, the classic, the cash business. Let's say you own a coffee shop. On a normal day, your shop pulls in $2,000 from actual customers buying actual coffee. But suddenly, your books are showing $5,000 a day. Where did that extra $3,000 come from? Drug money, bribe money, whatever dirty cash you need to clean. You simply stuff it into the register like it came from customers. And here's the beauty of it. Nobody questions a busy Friday night. You're paying taxes, you're hiring staff. On paper, you're a model citizen who's growing a successful small business. In reality, your cafe's signature drink isn't espresso. It's a money-laundered macchiato. Tactic number 9, trade-based laundering, aka the empty container trick. Now we get sophisticated, trade-based laundering. Let's say you run a fake export company. On paper, you're shipping 10,000 luxury handbags from Dubai to Singapore. The paperwork is flawless. Invoices, shipping manifests, bills of lading, everything filed, stamped, and fully legal looking. In reality, the shipping container is empty. Or maybe it's loaded with a few low-quality knockoffs just to make it look legit if anyone peeks inside. But the buyer still wires you $5 million for the so-called shipment. On paper, perfectly legal trade. In reality, perfectly laundered cash. Here's why this works like magic. Customs don't have the resources to open every crate. Prices of luxury goods fluctuate wildly, so nobody questions inflated values. Exchange rates change daily. Shipping documents can be forged, duplicated, or lost in a sea of global bureaucracy. The sheer complexity of international trade gives money launderers endless hiding places. It's a system built for speed and efficiency, not for digging into every single transaction. As long as the paperwork adds up, nobody's asking if your 10,000 handbags actually exist. And in many cases, they don't. The global trade system is basically one giant trust fall, and money launderers are more than happy to catch themselves. Paperwork gets confusing. The global trade system? Money launderers love it. Tactic number 10, black market peso exchange, aka the cross-border swap. Now, let's head to Colombia. The cartel has millions in US dollars sitting in piles of physical cash, stacked so high they can't fit them into suitcases. But wiring those dollars back home would trigger alarms in every bank and every government agency. They need a different approach. Enter black market peso exchange. First, the cartel hands that cash to a black market broker operating inside the United States. The broker's job? Quietly sell those US dollars to Colombian business owners who legitimately need American currency to buy inventory from US suppliers. Think of Colombian clothing companies, electronics importers, or car part dealers who need dollars to pay their vendors in America. But instead of going through banks, they buy the dollars directly from the broker, under the table. Once the broker makes those sales, the importers pay pesos to cartel associates back in Colombia. The result? The cartel ends up with clean Colombian pesos safely sitting inside their home country. The importers get the dollars they need to run their legitimate businesses. And the banks, they never see a thing. Two completely separate flows of money. One legal, one not, perfectly synchronized like a criminal ballet. The US dollars circulate through actual trade, while the cartel's profits land safely across the border, clean as a whistle. It's elegant, it's efficient, and unless you're watching both ends of the deal at the same time, it's nearly impossible to catch. Tactic number 11, real estate laundering, aka empty luxury towers. Ever seen a giant luxury apartment building where nobody lives? No lights on, no furniture, no people, just towering glass monuments to absolutely nothing? That's probably real estate laundering at work. Here's how it goes. You set up a shell company, usually in some offshore jurisdiction where nobody asks questions. Places like the British Virgin Islands, Cayman Islands, Panama, or even Dubai. That shell company buys a $5 million condo. Then, you flip that condo to another shell company you also control. On paper, it's just a normal real estate transaction. With every sale, the money moves. And each time it moves, it gets a little cleaner. You can hold the property, you can rent it out. Or you can just let it sit completely empty, collecting dust and gaining value. And here's why it works so well. Real estate values are subjective. One buyer's overpriced penthouse is another buyer's brilliant investment. As long as someone's willing to pay, no one questions where the money came from. Even better, many countries allow anonymous ownership through trusts or shell companies. So, good luck finding out who really owns that empty penthouse. Real estate is like a giant money laundering sponge. It soaks up dirty money, holds it quietly, and no one's the wiser. Now you know why that ugly penthouse nobody lives and costs $20 million. Tactic number 12. Shell companies, aka the Russian nesting dolls of finance. Here's the Swiss Army knife of money laundering. Shell companies. They exist only on paper. No employees, no office, no products, no customers. Just legal documents, corporate seals, and most importantly, bank accounts. One shell company owns another shell company. That one owns another. That one owns a condo. That one pays consulting fees to another shell, which pays another invoice from yet another shell. It's like stacking financial matryoshka dolls inside each other. And by the time investigators start pulling them apart, they're completely lost in a maze of offshore filings, fake addresses, and nominee directors who may or may not exist. The brilliance of shell companies isn't just how they hide the money, it's how they hide ownership. You can move millions of dollars across borders, buy property, open accounts, and fund businesses, all without your name ever appearing on a single public document. And the bonus? Many countries don't even require you to reveal who's behind the shell. It's anonymity for sale, all perfectly legal, until it's not. Tactic number 13, bank complicity, aka corruption inside the vault. Finally, the darkest trick in the book, bank complicity. Sometimes criminals don't sneak around banks. They go right through them, front door and all. A friendly banker, clipboard in hand, just waves the suspicious transactions through like it's no big deal. Maybe they're bribed, maybe they're complicit, or maybe they've just mastered the art of looking really busy while doing absolutely nothing. Maybe their boss said, "Don't ask questions," and that's the end of that. Because when the fox is guarding the henhouse, it doesn't matter how many regulations you write, those eggs are going to get scrambled. It's corruption inside the vault, where money laundering isn't just a crime, it's a full-time job with benefits. So, there you have it, the global laundromat. From cryptocurrencies to casinos, from invisible pandas to invisible penthouses. Money laundering isn't just something criminals do. It's an entire shadow economy built on legal loopholes, financial blind spots, and sometimes outright corruption. And remember, every time you see a weird art sale, an empty luxury apartment, or a suspiciously profitable terrible cafe, you might just be looking at someone's personal laundromat. Which laundering trick made you the most paranoid? Drop your favorite dirty money loophole in the comments. Smash that like button if your brain feels 12% sketchier, but 20% smarter. And hit subscribe if you're into ideas that stick, figures that sketch. Ready for your next system update? Tap here and keep playing smart.